Tuesday 12th November. We have here that breaker block again. We see the bodies are respecting that. We drop into this daily fair value gap. We don't trade down to midpoint. I would love to see it stayed open with that, but however it can trade down all the way to this order block in here and here, and trade down to this fair value gap. If we put the measurements, the FIB measurements on that, and we take the optimal trade entry measurements, and here we see that this order block is also very feasible. So we can draw down lower, especially since we took out the high. And now and then we drop into this weekly order block. So this is a very reasonable price delivery in here. We see that, what else do we see? We come to the opening price of yesterday. We're going to further investigate that in here. We respect that, as you can see. We respect that new week opening gap high, which is the opening price of yesterday. Furthermore, we measure this wick. Obviously, it's going to be not even traded to the midpoint of that. We do have a gap in here, and we do have a sweep in here, but this is just further confirmation of a market structure shift in here. This one. This one that I'm talking about. This could be the market structure shift to then draw down to possibly here. What the fuck is this? And then we trade into the breaker block in here, this one. So what is that? This in here, and then we have obviously that. We can, however, trade down all the way. It's maybe easier to show that on a 4-hour chart. All the way in here, back in here, you know, with the election year. I finally make that long-awaited SMT that I was waiting for a very, very long time. But that's not relevant anymore. Not so much relevant anymore, at least. Because we did just not have the sweep of that. Just not. We did sweep this. We have clean, very clean lows. Like extremely clean, too smooth. Too smooth. The low of that. Yeah, just a tick above. So we can draw down all the way to there. It's possible. So then let's go to today, which I was bearish. I wanted to see the new week opening gap hold in here. Very interesting is that we have this 4-hour gap in here, and we have that 1-hour gap, and 1 hour it's not being traded to midpoint of that, so that's unfortunate to see. And on the daily, the daily bullish order block is still respected. So for tomorrow, I'll need to see the new week opening gap being inversed, find support on that, and only then I'm willing to trade higher. Today we had a gap in here. We are using that not really much. We are more focusing on the new week opening gap in here. So now the most interesting part is this. It looks like a breakout in here. We had relative equal highs in here, relative equal lows in here. We trade down into here. That's the London session, and then we trade higher. I'm going to put the London session in my notes, my notation notes. This is that market structure shift, possibly market structure shift, and then we take out these relative equal highs for people to then entice having a long position traded to. So breakout artists are going to, here they're going to expect the breakout. They want to buy that again, and then they want to go high again. But yeah, like I said, we want to entice people. So first we need a fake breakout. Then we need a fake breakout in here. After we have that, we can possibly safely return to that new week opening gap or that new day opening gap in this case. That's the only way why we use it today, the new week opening gap in here at 2:30 p.m. Then we have the opening price. In here we generate sell side liquidity from 650 till 930 all the way in here. We do, however, sweep out these relative equal lows. Then we are once again we are targeting the breakout artists in here. Look a breakout, then they sell the breakout, and then they get enticed in here again. And then once again we have these people that think the price is now going to rally up, so they have a breakout in here, they buy the breakout, they get stopped out, then the price rallies up again. In here they could possibly enter long again. Why is this happening in here and not just in here? Because we didn't take out this previous day high. We swept this high, but we didn't sweep this high. Like we didn't sweep both of these highs. So that was important to do first on the ES. It did that sooner. So it did that, with the first price swing. So the you see in here, 9:36 a.m. and 9:36 a.m. in the ES, it did take out that high, and on the E mini it didn't yet. So that's why we don't take the trade. We don't take the short trade yet. We wait for a possibility to form a breaker block, which it does in here. This is then the breaker block, and it's being used again over here. This also got my eye because we in here have that order block. It's relevant because I'm talking about this breaker block. Bomba clot. There you go. Send to back. 15-minute order block in here. We trade back into in here. We have a breakaway gap. But we do trade back to that 15-minute bearish order block. And here my eye caught this too. Is that once we trade back up into here at the second macro, then we can have another entry in here. We do touch that new week opening gap, and in here we have the inverse fair value gap like that. Once in here I wanted to short. That's where I shorted. Once it traded back up to that high, I shorted in here. My stop would be here, or no, my stop would be just above the new week opening gap high, and we see that we only trade to the midpoint of that. After this and this, then immediately my stop would come to my entry point. After we had this, immediately my stop would come to this high in here. And after we take out this, then of course my stop would come to my entry, and we trade down to this fair value gap in here. Take partials definitely in here. And if we measure that first 30 minutes, the high and the low of that, it's probably two standard deviations. Wrong way again. Oh, 1.5 standard deviation this time. Okay. 1.5 standard deviations. I am going to mark that. So from here to here, that is 1.5 standard deviation. Make that white. So there you go. That's today.